And on the sidelines of the ET Awards, my colleague Pankaj Poddar caught up with former UTI Mutual Fund CEO Puri. Despite the volatility, he advises investors to stay invested.
I would say it's quite finely balanced. Actually, India's macro continues to be good. In fact, the 25% drop in oil prices has helped our macro. So far, our fisc has been well managed. External account is a little weak at this point, but relative to many other emerging markets, it's still strong. So India's reputation as a well-managed economy with strong macro continues. On the upside again, earnings have been fairly steady, stable so far. What we have to watch for is continued global turbulence with with Chinese, American issues on trade. Some of our own issues as we go into elections. I think global investors are very apprehensive that we may or may not get a stable government. Clearly, they would favor a stable outcome from the elections. So there will continue to be a certain amount of volatility. But relatively speaking, I'd rather be invested in India than pretty much any other emerging market right now.
You know, when we look at the valuations, a lot of stocks have fallen, mid-cap, small caps have fallen, but Nifty is where it is. How would you define the valuation of India? It is still at premium to others because of the factors you mentioned, or you would say we are relatively fine?
We remain fairly valued. I don't think we are overvalued. I think the overvaluation that had occurred in the mid-cap stocks, where they were trading at a very high premium to large caps, was unsustainable. So I, for one, am glad that some of that froth has come out of the markets. It's a more stable base. And now we should get back to normal behavior in terms of watching earnings, watching management of the macro, and of course awaiting the outcome of the elections. It's not going to be a spectacular year, I would predict, for equities. I would say it's pretty much more of the same, volatility around the mean that we have at this point. But it's not going to be a terrible year either.
Right. What is the sense you get about NBFC? It was the go-to sector for everyone. Everybody wanted to invest in high-growth NBFCs. Do you think now some rationality will come there in terms of growth, in terms of valuation?
Well, the NBFC sector was playing a very valuable role in filling the vacuum left by the banks, public sector banks in particular, but in general the banking system was failing to actually provide credit. Without the offtake that the NBFCs have enabled over the last, I would say, 24 months, we would have struggled, frankly, to maintain the levels of economic growth that we've seen. And many sectors, not just real estate, but many MSMEs and others have been benefiting from the NBFC sector. So we should be careful not to view the NBFC sector as a whole, as a pariah sector, just based on the failure of ILFS. ILFS is a very unusual institution, and one of the key risks that have to be managed both by the central bank and the Ministry of Finance is to ensure that that contagion is quickly managed and the healthy work done by the NBFC sector can resume. On valuations, yes, again there was frothiness that had crept into NBFC valuation. 6 times, 8 times book clearly suggested that there was an amount of froth, and again valuation will no doubt correct. But the more important issue is they need to be able to access funding and legitimately access markets to ensure that credit offtake in the industry can be maintained.
You know, just a word on capex, private capex. Every time we talk about an increase over there, but you know, suddenly something or the other comes up which takes the capex recovery slightly away. What is your sense about the pickup in capex? Do you expect in select sectors within infra, capex will start to pick up?
It's always a function of two things. One is business confidence. The other is, of course, where capacity lies and demand. And, you know, we had a period of underutilization of capacity. So just in a technical sense, there was no reason for people to undertake capex. Infrastructure-led capex, of which this country needs a lot, is going to be confidence-based. And that confidence is still being rebuilt at this point. I don't think we're quite there yet. It's a run-up to an election year that also is a question mark in many businessmen's minds as to what the impact might be on future regulations at both state and central level. So I would not...
Okay, that's Puri talking about the market environment right now.